Welcome to Kitco News. I'm Niels Christensen. Joining me today is George Milling-Stanley, Head of Gold Strategy for State Street Global Advisors. Thank you for joining us today.
Thanks for inviting me, Niels. Good to see you again.
It's nice. We talk on the phone. We don't do video interviews so often. So this is a treat. Gold's kind of surging. The price hit the bottom end of your year-end target, 1350 to 1400. What do you think gets us to 1400? What gets us to the top of your range?
Okay, let me just clarify a little, if I may. What I've said is that and I've been saying this for a few months now, that within the next 6 to 18 months, I was expecting gold to spend a considerable period of time above the $1,350 an ounce level. So in that resistance area between 1,350 and 1,400. And what we're seeing now is, as of today, that gold is right in there, and it's still barely the middle of the year. So I'm kind of encouraged by that. We have plenty of time for gold to do better. Whether gold's going to get up to 1,400 by the end of this year, I don't know, but we're certainly within that target area, nice and early in the year. I think we have good chances of moving through that resistance. But it has been the smart thing for speculators to sell whenever gold was above 1,350 for the last 6 years now, since the spring of 2013. So let's be a little cautious on our outlook here.
Okay, so you talked about speculative money. We're here at Inside ETFs Canada, a more generalist conference, and you're one of the speakers. You guys have a panel with the World Gold Council. What does that say about sentiment among generalist investors? Are they embracing gold, and does this sort of take that? Reduce the impact of the speculative hot money at 1350?
You'll be interested to know, Niels, that this is actually the third conference in 3 weeks that I've been at in Canada, which was a generalist investor conference, this one being specifically an ETF conference. I think that's indicative of the fact that gold has been becoming more and more a mainstream asset for some number of years now, and I think it's kind of reaching, it's reaching a really encouraging level right now. We launched GLD back in 2004, and I think that democratized gold investment. It made gold into an investable asset for a whole universe of investors who'd not really considered gold before. So I think gold is becoming more and more mainstream, and that's being reflected in these kind of conferences. And I have more to do up here in Canada too, later in the year, so we'll see each other again.
And not only that, but I mean, and that's why you guys have been developing products actually to sort of entice more generalists. I mean, you launched GLDW, which is sort of gold and the US dollar together, GLD-M, the micro account. How is this helping to attract sort of the rest of the marketplace? Well,
GLD established a bulwark, if you like, within the institutional business, and it's now probably 50-50 institutional and individual investors. Been around for a long time, deeply liquid product, great optionality if people want to take advantage of that. So that's now settled. It's the flagship product, if you like. But we became aware that there was this general trend across the whole universe of ETFs towards lower share prices and lower expense ratios. And we wanted to offer investors a spider product in the gold space that fit in with those parameters, which are increasingly becoming very popular. GLDM fits right into that. It's based on 1/100th of an ounce of gold instead of 1/10. It's a $13 share instead of a $130 share, and it has a lower expense ratio at 18 basis points. It's a no-frills product, if you like, which is already appealing to the retail market very definitely. And in just under 12 months of existence, its birthday is next week, just under 12 months of existence, GLDM has amassed $750 million in assets. That's a success as far as we're concerned. And then GLDW, the other product that you mentioned, GLDW is basically designed to offer investors exposure to two assets that are widely regarded as defensive, as safe havens, if you like, gold and the US dollar, but it offers them these two exposure to both these assets in one ETF. The way markets are going right now, with safe haven buying driving up gold and the dollar recently, then I think that GLDW will perform during the rest of the year as well.
You mentioned safe haven demand. What are your thoughts on recession? I mean, does gold continue to go higher as we deal with escalating trade tensions, slower economic growth? How does this environment sort of impact gold?
Gold has this funny response to recessions. Recession tends to reduce jewelry consumption. People feel less prosperous, but it tends to increase investment consumption because people feel more worried. So there is this offsetting mechanism within gold. And as the jury's still out on the question of recession, the bond markets are sending us very conflicting signals. I'm waiting to see the 2-year and the 10-year invert. The 3-year and the 10-year have inverted and then moved back and then inverted again. So we're getting confusing signals from the bond market. I would look for maybe some clarity from the Fed when they issue a statement. And as the months unfold, I think we'll get a much, much clearer picture of whether we are going to be moving into recession. But even if we are, as I say, gold has this self-correcting mechanism to it.
Excellent. Well, thank you very much for joining us here at the conference, George.
Thanks, Neil.
Thank you very much. Stay tuned to Kitco News for more coverage from Inside ETFs Canada.